What's going on, y'all? Happy New Year and welcome to 2025. You're sitting here with yours truly, Kevin Weedmark, where I'm going to bring to you today my predictions for 2025. And if we just look at 2024, right, it was slightly disappointing. We're happy to see it in the rear view. We thought that the market would be much more improved from 2023. We did see a slight improvement in the real estate side. We thought we'd see much lower rates. We ended near highs for 2024, so that wasn't great. And affordability was the main term that I like to use throughout 2024. So now moving into 2025, what do I see? Affordability is still going to be the biggest concern, right? We're seeing a lot of people flock to lower housing areas. We're seeing a lot of people still sitting on the sidelines waiting for interest rates. And then we're also seeing right now what I believe is going to be a very bumpy ride. We have an incoming administration and so on and so forth. So with going into my predictions, I think the best thing to do is kind of outline the players. So let's start with that. And what we'll do from there is we're going to outline the players. I'm going to talk about what I think is going to happen in each quarter of the year, and then we're going to go from there. So right now, number one, it's going to be the Fed. The Fed is obviously going to play a huge part. They affect the Fed funds policy. They overall, with their vernacular, affect the markets. But I do not see them as a huge player. I think the incoming administration, the Trump administration, is going to trump that, for lack of a better word. I think they're going to get very aggressive. They're going to give a lot of pushback to the Fed. They believe that they should be controlling monetary policy. And I think the Fed is going to become much more irrelevant. And I think we're seeing that now with traders. Traders are not really high or keen, should I say, on what the Fed did in 2024. I think their ability to really affect the markets right now seems to be somewhat non-existent. And as we can see, they are always a day late and a dollar short. And I expect the same from them. They're now saying they're only going to give 2 cuts instead of 4. So really their relevance throughout this year is going to be extremely limited in my opinion, other than I think they're going to get a little bit more political because they're going to get a lot of push from the Trump administration. So that is certain. The Trump administration, look, there's several things that they want to tackle, so let's just kind of go through them really quick. And where I think they're going to be able to make an impact if they're able to do all these things simultaneously, and time will tell. But the biggest thing I want to point out is, look, we have another election cycle coming in 2 years. You're going to have members of Congress that want to position themselves for that election cycle. It's going to be extremely aggressive out of the gate for the Trump administration come January 20th and moving forward to get shit done. So, reduction of the federal deficit. With the creation of DOGE, I think that they are going to implement some policies and it's going to be shoved and Congress is going to pass some things to eliminate some government waste. Hopefully they tie up some loose ends. You know, what was it? An estimated $247 billion was made in improper payments in 2022. I mean, just take that number alone. We have a $36 trillion deficit. It's obvious that things need to happen. The federal deficit needs to come down, and I think that is something that the Trump administration is going to really focus on with the creation of DOGE. The other thing, they're going to address the illegal immigration. And I don't mean that we're not going to have immigration into the United States. It's just going to be more buttoned up. And we're also going to go through kicking illegals out that are creating crimes, things of that nature. And I think we're also going to see a layer that comes off that is bleeding our system, our tax dollars, whether it's from a local government or federal government. It is expensive for somebody to live on the government dole. And I think we're going to see that reduction, which those two things combined, right, removing the government waste, getting a little bit clearer, maybe laying off some government employees as well as getting rid of some buildings, and then dealing with the refugee crisis is going to bring down the federal deficit, which is huge for inflation. The reduction of government regulations, I think that's going to be great across the board. I think you're going to see some winners and losers depending on the vertical, being the industry, but I think that overall is going to be great. To me, the biggest factor, and it's going to be the biggest one, is going to be energy independence. The Trump administration has said, drill, baby, drill. I do not think they are kidding. We are going to expand fracking. We are going to do everything possible. We have the most natural resources. We are going to take advantage of that. And I believe by Q3, Q4, we are going to once again, especially down here in Texas, see gas prices below $2 a gallon, which is just going to basically run all over, right, every part of the economy. So transportation, hiring, it's going to allow companies more dollars, especially with the regulations as well, to tap in, make investments in maybe Salesforce, maybe make investments in research and technology. Major purchases could potentially happen as well, and the future of investment, I think, looks bright. The other thing we're going to be dealing with is inflation. You know, all of 2024 was the biggest concern. As we head into 2025, make no mistake about it, I think it's also the biggest concern that's weighing on traders' heads, which is keeping treasuries high and mortgage-backed securities high, which is keeping interest rates high. I think a lot of that gets alleviated as we move into Q2 and Q3. I'll dive into that a little bit. But with the reduction of the federal deficit and with us becoming much more energy independent, the long-term trajectory for inflation is going to be coming down. Do I think that the Fed is going to get on their soapbox and claim it's them? Of course I do. But again, it doesn't matter how it gets done. I think inflation is going to become a little bit more of a mild thing that we talk about, and it's not going to be the long-term concern that we all have. And I don't see the tariffs really playing a big part into it. So, the labor market, I think to the surprise of 2024, the labor market was extremely resilient, right? In the face of the highest rates that we have seen in 2 decades in 2023, which rolled over into 2024, I think the labor market really sustained where it was. The biggest thing, however, was there was a lot of government employees added. So what's going to happen, I believe, in the labor market is that's why I'm saying it's going to be extremely bumpy in Q1. And the reason for that is you're going to see a pullback of government employees and you're going to see the reduction of regulation. So you're going to see a hiring of the private sector, but it's going to be delayed a little bit as they digest tariffs, as they digest all the other policies that are going to be implemented by the Trump administration. It isn't just going to be like that. But be certain that you're going to see DOGE and you're going to see the government laying off federal employees that they believe are waste, that are non-critical for the function of the government to serve the people. The last thing is politics. As much as we would like to believe that politics does not play into all of this, politics does, unfortunately, and that includes the Fed. I don't care that Powell tells us time and time again that they are not political. The fact that he has to mention it over and over just proves the point, right? Somebody that indicates, hey, I'm not, take it in just general terms with like your job. I'm making 100 calls a day. They keep telling themselves what you want to hear. I'm making the calls only to find that you see the Rolodex and they're not making the calls. So again, in my opinion, everything is going to be political as we move forward. That's just the fact of the matter. And what you're going to see is we now have an administration that's going to come in, will control all 3 branches of government, and you're going to have an opposition that's going to be pushing as much as they can to stop as much as they can. So it's going to be a really change in dynamic of how we can force things. And like I already alluded to, you're going to have the Trump administration pushing hard because become 2026, a lot of those Congress people are going to be up for election and they're not going to want to move as much policy. So you're going to see full speed ahead this year with what they're trying to accomplish so they can get the votes and push it through. All right, so without further ado, let's break it down. First quarter, I think is going to be really bumpy. I think a lot of people are going to sit, look at what the Trump administration is going to do. They're going to come out fast and furious. You're going to see a lot of bills passed. I think you're all going to also see a lot of executive orders. You're going to see tariffs. The Fed will meet twice during this time. I don't think they do a damn thing. I think they're going to have political vernacular where they're going to be addressing inflation and saying that some of the actions of the administration are inflationary. But I think the traders are a little bit more savvy than the Fed itself. I think we saw that throughout 2024, which is where I said at the beginning, the Fed's becoming a little bit less, important. I don't think a lot of people really think that their influence is essential. The traders are way ahead of them, so the markets are way ahead of them. So I don't think that they have as much impact. All that being said, I think we're going to be a little bit on the higher side. I'm predicting that conforming rates are going to be about 6.625 to 7.375 during this quarter. I'm giving a wide range because, again, there's a lot of uncertainty. You have a Fed meeting at the end of January. You then have the meeting in March. You have continuing resolution. There's a debt ceiling issue. A lot is going to have angst for a lot of traders and so on and so forth once this administration takes over. So my term is on bumpy. Number two, the second quarter, we're going to have lingering uncertainty. I think as the policies continue to get implemented, I think that we're going to start to see inflation trending down. I think we will get our first Fed funds rate cut during this term, but I don't think it's going to be in about the May 1st timeframe. They'll pause in June, but I think they're going to give our first cut come May. What do I think it's going to do for interest rates? I don't really think it's going to do much. We're going to see them drop about a quarter across the board. I think that's where we're going to get a little reprieve. And I think a lot of it's going to come where we're going to see market corrections. And what do I mean? I think like the NASDAQ, the Dow, I think crypto corrections. We're going to see corrections in those markets, which is going to lead to some investors moving into treasuries, mortgage-backed securities, as they become a little bit more certain, a little bit more of a hedge against inflation as inflation starts to come down. So we're going to start to see that crossover. By the third quarter, summer's in full swing. I think the real estate market's going to be doing very well at this time. And the other thing I need to say is in Q1 and Q2, we're going to see an increase in inventory. So that's going to be a good thing. It could lead to some downward pressure on real estate, depending on where you are in the country. But overall, it's going to be a good thing for the market. It's going to look like a little bit more of a stabilization. Back to the third quarter, we're talking about a reset. Summer's going to be in full swing. I think that the real estate market's really going to pick up. It's going to look much better than it has the previous 2 years. I would look at it from a reset in the fact that I think now that we're now 6 months into the administration, everyone's getting an idea of what they want, how it's going to move, how robust the economy can be, how resilient it's going to be, how the increase in the energy independence is pushing down inflation. I think you're going to get a reset of just the overall feel of the outlook, which we really haven't had for the past 4 years. It's been extremely bumpy, extremely volatile, coming out of the pandemic, policies that were kind of anti-growth and so on and so forth. The Fed's going to be on its soapbox, but I do think that we're also going to, we're not going to get actually we're going to get our second cut on September 18th is what I'm predicting. I think they're going to go back to that time, and we're going to see interest rates drop maybe about another eighth to a quarter. The reason for that, we're going to be about a year into when the Fed did its first Fed's fund rate cut. If you recall, on September 18th of last year, that's the first time that they reduced it after all those increases. And I think we're going to start to see that lag effect spilling over a little bit. And again, I think with inflation continually coming down at its very slow trajectory, but the future looks bright in that category with the energy independence and the reduction of the federal deficit. I think we're looking good, and I think that you're going to see investors moving back into mortgage-backed securities as well as the 10-year treasury market, bonds. Fourth quarter, full steam ahead. Everyone's going to have a very good indication of what is going on with the administration, with the economy. I think we're going to look at some great growth numbers. I think the labor market's going to be very stabilized. It's now going to have moved from the government to the private sector. I think we're going to be moving on a much more clearer path from a trader's perspective, a lot less uncertainty, which is going to be great for the overall market, right? I think we're going to see an increase in the real estate market at that time, right before we get to the holidays. Your September, October, maybe early November timeframes, I think are going to look fantastic for real estate. I think those are going to be the best times. I think you're going to see appreciation happening, and I think you're going to see a lot of buyers and sellers that are absolutely out there in the market space. So with the completion of 2025, while we're not going to see the low rates that we were anticipating, as we're getting into the 5% rates, I think we're still going to be in the sixes. We're absolutely going to see, a crypto market that is crushing it. We're going to see growth in the economy. We're going to see investment in portfolios increasing. We're going to see slight appreciation in real estate. And the biggest thing we're going to see is both buyers and sellers both feeling that the pent up, I need to do something. The time is now. The market looks much more stable. The rhetoric is much more stable. And when people feel a little bit better about themselves, whether they're in the 6 to 6.5% range to 6 3/4, or they're 5.5 to 6 1/4, is really not going to make the difference. The difference is going to be the feel good that we have moving into 2026 and where we're at towards the end of the year and how good 2025 has been up until that point. So those are my predictions. Hey, you have any feedback, any thought? I would love to hear from you. I'll be coming at you once again every week with my market update on Mondays. I'm going to be introducing a new brand. I'm going to continue to come at you on Fridays with my Friday wrap up. And I'm also launching a YouTube channel that's going to have a daily dose. So stay tuned. Really looking forward to it. And as always, if I can do anything for you, I would love to hear from you, and I would love to sit down and potentially game plan with you or how we together can attack the market, really influence both buyers and sellers, and put them down the right path with education and with expertise in the space. Alrighty, y'all, to 2025, be blessed, and let's all have an amazing year. Cheers.